What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the Binance token, so BNB. So if you're new to the channel, what we do here is data-driven analysis of the cryptocurrency asset class. One of the key ways that we do this is by using the DCA Index Risk Model. This is a machine learning algorithm model which helps you to identify where market cycle peaks and bottoms occur. So I've uploaded this model as a trading view indicator and it's available for free. You can sign up for it on the Discord channel. So I've actually just created the model for BNB, and that is available now. So if you already have access to the model, you should be able to access that right away. So just to quickly go over this, what the DCA Index Risk Model does is it essentially is attempting to identify where has the asset simply ran up too far too quickly and will require a pullback. But it's looking from a macro perspective. I don't really care about the short term. I'm not a short-term trader. There's not enough profit to be made in short-term trading. Anyone who, I would put the returns from using this model up against anyone's short-term trading results. Simply put, in the cryptocurrency asset class, you're taking on too much risk over time to accept making, a few percent here and there. This asset class is about investing at the correct times, and doing so affords you the opportunity to make absolutely incredible gains. And I don't think, a lot of people say things like that, but I really do believe that. And I'll be doing a video tomorrow, which will show you sort of how the market cycle played out using the DCA Index Risk Model from 2018 into 2021 and now going into 2022. So we'll just look at the entire thing sort of right after this bull market that occurred right here in 2018. And we'll show you how the DCA Index Risk Model can be used, how, in my opinion, it's optimally used, and what your results would be if you're using it correctly. Okay. So the way that I use it is when we're above 50, I start to sell. So maybe like 5%. And then when we get above 60, I start to sell maybe 10%. And then above 70, 15%, etc. All the way until you get to the top. And then you are out of the asset. Because as we see in each case, the location where the DCA Index Risk Model starts to hit into this 90 range, that indicates that you are at or very close to the market cycle top. And in the case of Bitcoin, the best strategy, in my opinion, is to be moving out of Bitcoin and into altcoins once Bitcoin starts to move up above 70, into 80, above 90. That's the time to get out of Bitcoin, because once we start getting up into this range, there's not enough profit left in order to incentivize you to stay in the asset. And in fact, it's very likely that within a month or two, the asset will have turned over and the entire asset class as a whole will be heading into a bearish segment of the market. One additional thing to mention is once Bitcoin starts to get into these highest tiers, that's typically when the profits that people are taking from Bitcoin, they move it into altcoins. And that's why typically I will move from Bitcoin into altcoins when the model starts getting above around this 70 into the 80 range. So that's how this model works. And this is the model for Bitcoin. You can see here that, we have the model for a huge number of assets, not a huge number, but I don't really make it for junk coins. I only make it for the top assets. And unfortunately, we had to sort of get rid of the Luna model because it's invalidated at this point, right? All of the data that we've trained the model on is no longer useful because Luna is in essence a completely new asset now. So you can see that we have it for a lot of the top layer ones, some layer twos, and in Polkadot's case, a layer 0. Okay, so here is the model for BNB. And what we can see is essentially that the model has indicated that there have been 2 price peaks for BNB. 2 peaks where it no longer made sense to be in the asset. So we had this time back here in 2018, in January of 2018, and that's what we just talked about. Bitcoin had reached its top in December, and that is when you wanted to be getting out of Bitcoin and moving those profits into the altcoins. Because if you look back here, right at the time where Bitcoin hit its peak on the DCA Index Risk Model, BNB, for instance, was trading at about $4 or about $5. And then once it hit 100 or, into that 90 to 100 range on the DCA Index Risk Model, it was all the way up here at around 24. Okay. And you knew to get out of Binance because the DCA Index Risk Model was indicating that this asset is very likely near a peak. Now, at that time, however, the models are very untrustworthy when we're looking at assets that are this young. So I would not have moved it into Binance. It likely would have been into some other asset, but the point remains because a lot of the other assets did the exact same thing. A lot of the older assets at that point, assets that there was enough data to sort of understand what type of move they might be able to make. And then in this market cycle, we went through the bear market, obviously, and Binance, just like everything else, took a rather significant hit. So going down, about 85%. And that was not unique to the Binance token. Many assets did the exact same thing. Although, realistically, Binance has essentially mirrored Bitcoin throughout a lot of its history. So while a lot of things didn't recover during this mini bull run, we saw that the Binance token actually did. And not many other tokens were able to do that. And that's because Binance has a strong use case. And this is what we always say. When you're thinking about how you want to invest, you want to be thinking, especially in the bear market, you want to be thinking about fundamentals. Binance, the BNB token, has one of the strongest use cases in the crypto market. It's used to reduce your fees on one of the largest, if not the largest, crypto exchange in the world. Okay. So it's always going to have demand. As long as crypto's around, it's going to have demand. I'm actually surprised and I'm not even sure why I haven't created a model for this earlier, because fundamentally there's a reason that this is the third largest non-stable coin out there. So you have Bitcoin, Ethereum, and then the Binance token. All right. So that brings us to this cycle. And you basically see that very similar to what Bitcoin has done. After March, it took the dip just like everything else did. This COVID capitulation event, it took a huge hit, but then it sort of steadily went up from this March crash. It was steadily increasing in price as the retail interest was growing in crypto because people were making money in the stock market. You saw personal savings rates increasing. That slowly shifted into the crypto market, and then we hit this parabolic run in December for Bitcoin, into January, and then January for a lot of the altcoins. So in the case of Binance token, we saw that it hit its peak on the DCA Index Risk Model right here, so in February. And now a lot of people may say, well, why did it not show that we hit the peak here? And that's because the DCA Index Risk Model is not concerned about identifying the exact price peak. It is concerned with finding where it is that you can extract the most value from the asset. And when the price had ran up this far, this quickly, you're essentially sitting in the asset, so going up to $356, and then it peaked at around a 2x. But if you would have got out of Binance at that time, if you would have got out of Binance right here in February and moved into other altcoins, which had yet to really go on the move, if you would have been just sitting in Binance token, you were essentially leaving a huge amount of money on the table, because a lot of the altcoins had still yet to go on their major runs. And so there were returns to make, something like 5 to 10x on a lot of different assets. But if you were sitting in Binance token, you would have been, in fact, right when the DCA Index Risk Model hit its peak, you would have, if you just sat in this asset, you would have been down around 50%. Okay. Not for long, but you would have been down for 50%, and you would have been down 35% for quite some time, actually. All right. So there was relatively little upside left. And in fact, from its peak, you see 92%, whereas a lot of the different altcoins had yet to really make their move. So that's how this model can be used. It can be used to take a position in things like Bitcoin and Ethereum and then move that money out of those assets and into assets which have yet to make a move. Now, what I will say with regards to the DCA Index Risk Model, Binance token, you may not exactly fall into this category because I do think it's sort of fundamentally, it has a strong use case. It has a large market cap. So, it may be slightly different in this regard, but typically I do not recommend using the DCA Index Risk Model to dollar cost average into altcoins in a bear market. And that is because of the fact that in a bear market, an asset that's down 80%, particularly an altcoin, if it's down 80%, it could easily go down 90% or 95% or greater than 95%. When you're thinking about how to invest in altcoins in a bear market, I typically think that looking for value is going to be, in general, your better option. And when I say looking for value, I mean looking for assets that are strong fundamentally and have gone down a significant amount. Now, you never know how far they're going to go down. So potentially, if you are going to use the DCA Index Risk Model, I would advise, perhaps not invest in altcoins until they're, really far down the risk model. And none of this is financial advice. I personally would be very careful because we've seen these altcoins, like I showed right here, these altcoins, they can really get hammered when we're in these bear markets. So Binance was down, like we said, 84%. Bitcoin was even down 84%. Ethereum was down greater than 90%. And most of the altcoins were down 95% plus. Okay, even the ostensibly fundamentally strong altcoins were down greater than 90%. Okay, so the last thing I'm going to quickly show is the volume profile visible range for BNB. And what we can see here, actually, if you're new to this metric shows us where we have high amounts of volume and where we have low amounts of volume. So for instance, this range right here that I'm, exactly where I'm highlighting right now, and I'm going to make this white. So in this range, you see there's low volume. So as this comes out farther on this horizontal axis, you can see there's more volume in these ranges. And those ranges are going to create support zones because statistically speaking, there are more holders going to be positioned in these higher volume zones. More holders leads to more natural support because people typically don't like to sell assets that are, coming down to their cost basis. They're statistically speaking, this is all probability here, where you're more likely to encounter a level of support in these higher volume areas. Okay, so right here in this lower volume zone, this is an area where the asset can just quickly fall through if we came down here. Now, what you'll notice for BNB is we essentially have a very large area of volume all the way from around 220 bucks up to, where we're at and above us. So ultimately, Binance has a lot more support below it than many other assets do. And you'll see there's a huge amount of support down here at around 270. So if you're a holder of BNB, I think it would take quite a bit for it to grind down below this somewhere around 225 to 230 zone. But if it does get below that, then you're in a situation like a lot of other assets where there's a huge area where there's not much volume and it could quickly fall through that area. Okay. And that exists all the way from 225 all the way down to around 151. So your next big volume area is going to be down here at around 130. So that's what I'm watching for. I think this asset has a ton of support right in here at around 230. And I think that ultimately, as long as the market doesn't get too ugly, that this is going to be a strong level of support. So that's going to be it for this one, guys. Until next time, as usual, see you.